Today, let's talk about fake volume on cryptocurrency exchanges and general shady happenings that are going down, specifically today with KuCoin, but really spreads throughout the industry. Also want to talk about Samsung and their crypto wallet on the new Samsung Galaxy and why that is by far the biggest hardware news out of any phone related to cryptocurrency or having a crypto wallet. What's going on, everybody? It is your boy Crypto Bobby. Hope you are having a great day, great night, wherever you are watching or listening in from. And yep, today we got a lot of interesting things to cover. The market is overall looking fairly nice for the time being. We'll take a look at Bitcoin, at ETH, at some of the other cryptocurrencies as well, but really want to spend the bulk of the time today on KuCoin and this article that came out from the block and just looking at fake volume, specifically on KuCoin in this case, but also on some of the other exchanges. And there is a really good article blog post that we'll link to as well. So we'll dive into all of that and more in today's discussion. So we've talked a little bit about fake volume on the channel here before, but what has brought up this discussion and why I want to cover it today specifically is there's an article that came out today from the block, theblockcrypto.com. If you're not following them, definitely a good site for crypto-related news. And this came from Isabel Woodford, one of their writers there. The title of the article being KuCoin's leaked volume boosting offers draw accusations of wash trading. So really at a very high level, what happened? KuCoin, which is a Hong Kong exchange that has triple platinum, titanium, Ninja Turtle ambassadors here and there, somewhere across the YouTube space. But so the block has found KuCoin, a major Hong Kong exchange, asking projects at risk of being delisted to pay substantial volume-boosting fees. And while this has often been rumored here before, multiple sources say KuCoin has actually asked them to pay for this service. And then KuCoin told the block that those communications have actually come from fake or rogue employees. So really, we'll dive into exactly what that means. So there is, KuCoin had come out and said there were 16 tokens in late 2018 that were delisted from the platform. They came out and said, actually, those were, useless tokens. They weren't actually generating any trading volumes, and they were pointless. However, the block reached out to some of those 16 tokens that were delisted from KuCoin in late 2018, and at least 4 of them had received an ultimatum from KuCoin asking them to pay $180,000 in volume boosting fees or risk being delisted. And one of those cryptocurrencies was Jabril. I've actually met a few folks on the Jabril team before, but Jabril, Encryption, Publica, and Unicorn were all advised that they would be delisted, or the only other way to not be delisted was if they were to pump volume by any means necessary. And then by pumping volume by any means necessary, they were introduced to market-making relationships with market makers that would pump the volume of their specific tokens so that they would be able to stay on KuCoin. Now, what does this all mean, like, at a really high level? Okay, so if you're KuCoin and you have a bunch of tokens on your exchange and they're not generating any volume, that's not great because, number one, you're not making fees. And the thing about volume in cryptocurrency, or at least on cryptocurrency exchanges, is there's kind of this like coin market cap where volume begets volume. If you go on coin market cap, if I'm an investor, if you're an investor, if I go on coin market cap and I'll pop over here onto coin market cap and I want to find out where something's trading, if I scroll down, we'll say, here we go. Let's see Chainlink. We got all the Chainlink homies that always love Chainlink. So if I want to click on markets and I want to buy Chainlink, right now, Binance is the number 1 market for Chainlink, but maybe I don't want to go to Binance. The number 2 market is actually BitTrue, which I've never heard of before, but maybe it's a legit exchange, maybe it's not. I have no idea. But the link to XRP token is, or the link to XRP pair is the largest one. But if I am trying as an exchange to get new users to my platform, I am never going to be able to get new users to my platform if I'm down here like Gate.io and my pair is linked to ETH and there's only $300 in volume. So what might happen is, in this case, you have KuCoin, or you have KuCoin trying to pay market makers, or trying to involve market makers with these projects that aren't generating enough liquidity on and trading volume on KuCoin. What they're trying to do is introduce those projects to market makers, make them pay a fee to stay on the platform. That way, these market makers are trading back and forth, essentially generating fake volume. And when they generate that fake volume, what that does is that moves KuCoin up this list higher and higher and higher, so that people actually see it on CoinMarketCap and other places that show trading venues, and they say, oh, wow, KuCoin maybe has a couple $100,000 in volume. I have a KuCoin account. I can go trade that pair on KuCoin instead of going somewhere else. And in reality, though, that $100,000 of volume isn't real volume. That's just kind of wash trading back and forth, back and forth, back and forth. And that's where the problem arises. If you, as a user, as a trader, go to execute a trade on that platform, there's not really any liquidity there. The book is actually super thin, and maybe you just receive a ton of slippage when you put in an order, if it's of any size, or nobody takes your order, whatever it might be. It's very problematic. Now, in addition to that, one of the other alternatives why an exchange like KuCoin might fake volume is because, or have their projects force them to essentially fake volume through the utilization of market makers who are performing essentially wash trading. One of the other reasons they might be doing that is for token listing fees as well. If you, like I said before, volume begets volume. And if you have a bunch of fake volume that starts to generate real volume, and it kind of creates this whole snowball effect of that volume rolling downhill and picking up steam and picking up steam. Once you start doing that, you'll have projects come to you that might be more willing to pay for higher listing fees to get onto your exchange as well. So that's another point that I definitely want to make, is that this is also utilized in certain respects with volume and listing transaction fees. Now, this type of behavior is not by any stretch limited to KuCoin. There are other exchanges that have done this before. There are other exchanges that will do this. And there are also other exchanges that will have this really, really obvious fake volume, trash volume, just super obvious wash trading. So if you're listening on the podcast, I will link to this trading pair that you can check out on KuCoin. It's GGC, and it's the Bitcoin trading pair, but there are others that we'll look at as well. But if you look at this on KuCoin, this is the 8-hour chart. You could see that the volume across the board is basically just buy, sell, buy, sell, buy, sell, buy, sell, keeping the price completely flat across the board. And then that has happened just really without any type of volume spikes. You can look at this in 5 seconds and tell that this is fake volume. Volume candles should almost never be exactly flat horizontally. That's absolutely outrageous, especially in the crypto markets. So if you look at this, you can really see across the board on an 8-hour time frame. If you do it on the daily time frame as well, it is painfully obvious how fake that this volume is, with somebody there just kind of wash trading back and forth as you look at it. And you can see here too, actually with GGC, I have no idea what that is. I have no idea if what this token serves to do. But if you look at GGC, the market maker bot actually stopped running for 2 days, and there was literally no trading whatsoever. The second that market maker bot stopped moving, there was no volume whatsoever. There was, it looks like, almost one trade occurred. And I'm sure you could go back and actually review the order book on that. But it looks like literally there was one trade in 2 days without that market making bot wash trading to keep that volume up. So really incredible to look at. And like I said, it's not just GGC. If we pull up Go, which again, I have no idea what Go is. I have no idea what the token is, but it's on KuCoin. If we pull up Go on the ETH pair, you can see that this volume, again, across the board is pretty much flat for the time being, regardless of the moves. Again, indicating that this is essentially wash trading via some market maker, shady market maker. And as soon as that looks like in the past 2 days that volume, that fake volume has died off, been kind of interesting to watch what's happened to the price. There's been at least a little bit of a dip recently because there's probably not much of an order book to support at all any type of sales or market depth there. So definitely something that is another example of how kind of this shady practice looks like. And if you want to see too, so we'll hop over to an actual real exchange. We pop over to something like the GDAX order book on the ETH to BTC pair, obviously a much more liquid pair, but you can see that buying action and heavy buy volume corresponds with increases in the price. Also, subsequently, when there is a large red candle on the volume aspect, you're going to see a subsequent corresponding there. It's not just flat green, red, flat green, red, flat green, red across the board, regardless of what happens with the price. So something to really look at when you are trying to evaluate whether or not an exchange is faking volume on a certain pair. Now, Sylvain Ribes, or Ribes, I probably butchering the pronunciation, apologize on that one. But Sylvain put out a blog post, and I had actually talked about this in the past too. But this was from March 10th of 2018. It's an 11-minute read. It's entitled "Chasing Fake Volume: A Crypto Plague," which discussed how OKX, the number one exchange rated by volume at the time, had approximately 93% of its volume coming from similar market-making shenanigans, and providing charts to look at showing exactly what fake volume really at the time looked like in comparison to real volume, where you had the LTC BTC pair on OKX versus what that looked like on Poloniex at the time, and how you could tell the actual differentiators between the absurdly consistent volume which you see on fake market-making wash trading type pairs versus when the volatility and you see spikes, dips, and actual variations in the volume on a real pair on crypto exchanges. So I will link that post in the description below in YouTube and on the podcast as well. So what does all this mean for you? Number one, I would think, this is certainly, in my opinion, this is most definitely happening on KuCoin, and this is most definitely happening on other centralized cryptocurrency exchanges as well, and even probably some decentralized cryptocurrency exchanges that have a visible order book, where, it is the same situation which I talked about before, where if you have volume occurring on your platform, it's going to increase other people to come, whether or not that initial volume, that initial spike is actually legit and is actually real. So as a potential trader, as somebody who's an investor, look at the volume on some of these exchanges on the specific pairs. If the volume is flat across the board, if there is no variations on that volume whatsoever, might be, maybe do a little bit more due diligence before trading on that pair or on that exchange as a whole, because that, might indicate a little bit of Tom Foolery happening on that specific pair or also on that exchange. Now, in addition to that, I would, in my personal opinion, I think, you just want to be aware of what can happen with that. And if you are somebody that has a large, bit of an investment, you're trying to buy or trying to sell, when you go to do that, it's likely that either those orders really aren't there. You're just going to face a really large amount of slippage. So also keep that in mind when you are trading, is the dangers of slippage if you have a larger order, or even probably a moderate size order with the amount of tomfoolery happening on some of these exchanges as well. Now, in positive news, Samsung has confirmed the Galaxy S10 will include private crypto key storage. And in my opinion, this is actually pretty awesome news. I am a person that will likely not really have any interest in carrying cryptocurrency on my phone, or let's say anything over $100 worth of cryptocurrency on my phone, just because of security risks or anything like that. But as a whole for the industry, I think this is absolutely a net positive, and I think this is a great thing to see. And there's a number of reasons why it's a great thing. So first of all, this was actually confirmed by Samsung. This has been rumored to happen for quite some time now, but this is a new function they are using in the form of what they call Samsung Knox. And the Galaxy S10 is built with defense-grade Samsung Knox, as well as secure storage backed by hardware, which houses your private keys for blockchain-enabled mobile services. Comes with a variety of other features, and this is interesting too, because, and this is one of the biggest components of this. A lot of people are probably like, well, what about the HTC phone? What about the Siren Labs phone? What about the Finny? This is huge. So this is straight from CoinDesk, and I'll paraphrase it a little bit. But so the S10, the Galaxy S10 joins a growing line of smartphones designed with cryptocurrencies in mind, including the HTC Exodus 1 and the Siren Labs Finny, both of which were announced last year. Samsung is the latest phone manufacturer to announce this type of phone, but is also the largest, so it has by far the largest distribution potential there. Now, this is the biggest part. Not only is Samsung the largest phone manufacturer to release this type of phone, but this is Samsung's flagship line. So this is not like an offshoot phone, or this is not some like, little side thing that Samsung is just like, oh, we're releasing this little feature, but it's going to be on some phone that nobody's going to buy. This is actually on their flagship line with 4 different devices that fall under the S10 umbrella. So it will fill a very wide market. And lastly, this is the most important part in my opinion. In contrast to the HTC Exodus 1, that can only be bought using Bitcoin or Ether. And the Finny can only be purchased using the Siren token. The Galaxy can be purchased utilizing whatever the hell you want to purchase it with. The fact that the HTC Exodus 1 is only to be bought by Bitcoin and Ether, and the Finny can only be bought by the Siren token. Good luck with that, Siren Labs. Seriously, good luck with that. I don't know. That's could be a problem. The Galaxy S10 can be purchased, or the Galaxy S10 varieties can be purchased in the way you actually would normally purchase a phone. So I think that that's pretty huge. And I think that in the long run, if you are interested in seeing greater cryptocurrency adoption, the fact that basically one of the largest, if not the largest phone manufacturer in the planet, and one of the most popular, in addition to or alongside of Apple, is building a cryptocurrency-enabled wallet within their phone is, in my opinion, pretty large news, especially the fact that it is in their latest flagship line and not in some offshoot, piece of crap line, phone that they're just throwing off to the side to appease a few people. Pretty big news in my opinion. So outside of that, what am I looking at right now in the crypto markets as a whole? Bitcoin still slightly below $4,000, sitting at $39.20 as of the time of recording this video. I would personally love to see Bitcoin break $4,000 and hold above that for a bit of time. We haven't seen $4,000 Bitcoin, at least on GDAX and some of the other exchanges outside of Bitfinex, for really since the first week of January, and we're not above $4,000 for an extended period of time. It was about 4 or 5 days, and at that point in time, once we failed to kind of gain any momentum above $4,000, we went back and retested that $3,300 low range that we've gone after before. So would love to see Bitcoin break above $4,000 and hold that range for quite some time. Otherwise, I think we might have a retest back to the low threes that we've seen before. And with that, too, there has been some continued opportunities in some of the small to mid-cap coins as well. Makers continue to pump, which has been somewhat impressive, and I don't want to say surprising, but impressive to see Makers up, I believe, 25% in the past 7 days. And a variety of other cryptocurrencies have pumped pretty hard recently, or pumped in comparison to what used to be pumping in the cryptocurrency market. But I'm definitely keeping an eye on Bitcoin at that $4,000 mark, Ethereum at that 150 mark, and what that might look like. But there certainly are other opportunities throughout the market if Bitcoin can at least hold where we are right now. Would love to hear your thoughts on fake volume in the comments below. And if you are on the podcast, definitely feel free to hit me up on Twitter at @crypto_Bobby. Always love to hear your thoughts there. But do you think that fake volume in the crypto market is a massive problem? Is it something that you've noticed elsewhere? Would love to hear if you have any examples of cryptocurrency fake volume pairs on exchanges. Definitely feel free to hit me up on Twitter or in the comments below. That would be awesome. Would love to see those. If you enjoyed this video, really hope you did. Hit that thumbs up button, hit that like button. Thank you so much for your time. Crypto Bobby signing out. Hope you have a great day. Peace.